like to start off each show with kind of a summary of what I saw happening this week. And so let me share my screen here. Look at our chart. This is going all the way back to 2017 here. We can see, a lot of different activity altogether. The chart is definitely up.
Yep.
It doesn't go straight up, as you can tell. That's for sure. We've got, in 2018, that was a little over 19% drop. In 2020, that was a 35% drop. And in 2022, we had a 28% drop. And we're still up, right? So just kind of how it goes. We seem to get a bigger motion one way or another, I think, in the markets, more recently. The big downturns that have happened, like the 2008 downturn, those were pretty infrequent. If you look at the 2000 downturn, 45% down, they were every 35 years. Great Depression, 1970s oil shock, and then 2000. So it seemed pretty. And then all of a sudden we have 2008, not that far, and then 2020. 2020 is a little bit of an oddball one because of the pandemic. It wasn't truly a
Yeah, it was kind of a
economic
blip
event.
in a sense.
Yeah, in a way. But that's kind of how it works, and we'll talk about that some. But this has been a fantastic year. I saw the Vanguard Total Stock Market Index is up, in the 30% range for the year to date. And that's kind of the whole market, including the small cap stocks. And the S&P 500 is in, the 26% last year, looks at 28% this year. So this week, it looks like it might be down. It depends on kind of what happens today. But we're down Monday, Tuesday, and we were up quite a bit on Wednesday after the inflation report came out. So the CPI report was reported on Wednesday morning. And so this is not the main inflation report the Fed looks at, but it is the last one before the Fed meeting next week. So it was somewhat important as far as that goes. It came in at expectation. I didn't think it was a great report. It was a little bit higher than the month before on the top line. Inflation had matched the month before, year over year on the core inflation.
Yeah, a lot of people were saying the underlying factors were kind of where people were getting some kind of hype for, I would say.
Yeah, exactly. And so it's a just another piece in the puzzle. I did see, though, on Wednesday, the market, the futures market that kind of bets on, Fed rate cuts went from about 85% to 96% chance of a 1/4 point cut. And just so you kind of understand that, January is the next meeting, and there is an expectation right now, looking at that futures market, that there will be no rate cut in January. And then March, right now, the expectations is that there would be another 1/4 point rate cut. So, we'll see how that plays out as far as that goes. There's lots of data that's coming in. But overall, the economy is doing quite well. Inflation is, down there, still not falling down to that 2% level.
It may take some time. It's not going to just free fall to the 2% like we wanted to.
Yeah, they've talked a lot about how the last mile, kind of getting from this 2.7 or 2.8 or wherever we are right now on core PCE inflation, getting that last mile down to 2% is pretty tough. But you have to understand that the Federal Reserve really doesn't like it to be under 2% either. So that's why we're seeing rate cuts now, because again, they take 3 to 18 months to really have a significant impact on the economy. And so they don't want to leave rates up, in theory, to be able to, make sure that they don't end up with a recession or a
Big
situation.
unemployment, yeah.
Yeah, unemployment going up quite a bit. As far as that goes. So we did get first-time unemployment claims this week. They come out every week. And they were higher than expected. And so, we'll see what happens. I think that, again, that just gives the Federal Reserve another reason to lower rates next week. And so it would be a very big surprise, I think, to everybody if they didn't. And they've been signaling that they're planning on doing that rate cut in December. So I don't think that's going to change that much. And so, when we look at these things and we look at kind of what's going on, market-wise, one of the things it's always interesting to me, the market is all about supply and demand. And at the end of each quarter, these very large funds of all types, the target date funds, these momentum funds, they rebalance, right? And so you'll see some volatility oftentimes. And then when you get to the end of the half year, you've also have more funds that might be rebalancing once every 6 months. So that's the same thing here in December. And my experience in December has been that December is a good month, which historically has proven out to be true. It's not as good as November. It's not as good as April on average, but a good month. And what I have seen, though, is softness in the middle of the month a lot. And I think it is because of this rebalancing. So you know, we're talking about all these different things and trying to attach news to different motion. And yet, December after December, I have seen kind of this, at least volatility, small drops, those types of things that are happening. So if you've got a fund, let's say that's supposed to have a certain target of bonds and a certain target of stocks, and you've had this last 6 months, stocks have outperformed bonds by quite a bit. And when you rebalance, you're going to be selling some of that stock and buying some of those bonds,
Mm-hmm.
right? And so, that's where you kind of see that. You really kind of need to ignore that, in my opinion, because every time it finishes, usually in this case around the 27th, 28th of December, uh, it takes off again and it starts to go. So, obviously there's a lot of uncertainty about next year, just in terms of, what policies are they going to do. There's the rhetoric of the campaign and then the actual, things that are going to happen. How are those things going to affect the stock market? Are they going to be able to do tax cuts? What do those tax cuts look like? Or even just extending, the current tax brackets
Mm-hmm.
that we have from 2017. And we are seeing a bump in kind of that big cap tech stock. Uh, I don't know if it'll hold up. We'll see. But oftentimes, when there's uncertainty, that's when those stocks tend to do well, at least outperform. So, in that big drop in the pandemic, the Apples and Microsofts of the world didn't drop nearly as much
Mm-hmm.
because, again, people are still trying to stay in the market. The big money likes to stay in the market, but they're going to go maybe to these companies that can survive more things than the other companies. And so, I'd be interested to see if that trend continues here, if we continue to see kind of large cap tech continue to do well on a relative basis. They led this rally. Again, they're the first thing that comes out of the rally because they're the place people are putting money because
Mm-hmm.
they're not sure about the rally yet. Then once we're sure about the rally, we start to see a breadth, increase. Mid caps doing well, small caps doing well, value stocks doing well, and we'll see relative underperformance of the large cap tech stocks, which is what we saw for a big chunk of this year. Right
Mm-hmm.
at the very beginning, great run on those big cap techs, and then here for kind of the middle to the end, we've had some softness, but it seems to be picking back up again. And I wonder if that theme will continue. I wonder if it'll continue into next year until we kind of get some better ideas of what's going to happen and how this is going to play out as far as that goes. So again, fantastic year. I've had some questions about, okay, we've had 2 good years. Is it time to be selling? Is it time to, get more conservative or those types of things? Um, so I found this chart. Oh, it's not changing. Bummer. All right, so let's try go back to here. Go back to here. Nope, doesn't change.
Okay.
Hang on a moment, folks. We got a
Little tuck.
tech issue here. Sorry for the delay. This is actually a pretty sophisticated studio. We have a lot of different things going on. Sometimes they don't work, but this is a chart of rates of return on the stock market going back to 1930, and it's pretty amazing to look at this. Actually, if you study it, even a little closely, if you see the last two bars are the last 2 years,
Mm-hmm.
and we've done better this year than we did last year. Last year was fantastic. This year's been even better. Uh, so if you look, there's 18 times where you had at least 2 years in a row where the market went up.
Mm-hmm.
Out of those 18 times, 11 of those 18 went on to at least a third year, if not more. So on a probability basis, just looking at historical norms, we should have a chance of a third year
Mm-hmm.
being at least positive, right? As far as that goes. And there's some really big runs in there where it's 4 or 5 years where it's positive, and those types of things too. And matter of fact, their last really big run there was leading up to from 95 to 2000.
Mm-hmm.
And again, we've been talking about kind of the similarities of that run and this run. I mean, today Broadcom was up what 20% after their earnings
I think
report.
it's up to 25 now.
25%. So, and they're running on the artificial intelligence. they have a lot of chip company access and software. They're a big company with lots of different components, but um, that's the the outlook of what might be happening for them with artificial intelligence. And so that's the same type of things that we saw. So again, if this continues to play out like a normal bull market, or even more so like the 1995 to 2000 run, next year we'll get a bit more frothy once things settle in. I mean, imagine a tax cut, corporations go down to 15%, or deregulation, or any of the things that the market seems to think are good things. And all of a sudden, you're having another rally come through. There'll be IPO. In my opinion, IPO market will start next year, maybe in the second half of the year, and then of course in that total, look at what might happen. Eventually, it gets nutty. Yeah, and so you'll start to get more and more IPOs. Many of them not making much sense. Crazy little things that are happening. Whatever. At the end of 21, it was the SPACs. At the end of 95, 2000 run, it was the crazy little .com companies. Didn't even have a product, no revenue, no nothing. They just went public, and saw pretty significant gains. So, that's the process that could play out here. I think it'll be interesting to see, what really does happen as far as that goes. But it has a chance. The probability is that we will do well next year. That's just that. You look at the economy, you look at the stock market, you look at the history of the stock market, you look at the momentum of the market. The momentum is not slowing down at all. Actually, it's if anything, if we look at this chart, that run from last summer of 2023, October 27th there of 2023, that's a pretty significant run. I mean, that's a very smooth looking chart. We had a drop in April, we had a drop in August this year, right? So we've had some downturns, but really not a lot of dips. And the dip buying's coming in like earlier and earlier, which is a good thing. So anyway, that's kind of what I see happening here. It's anything can happen. They can really mess up with these different policies that they're talking about and really mess up the market. I can see that as a possibility on the downside. You can always have some geopolitical things that happen that have an actual economic impact. Like Ukraine was a drop to the market up front because the fear was that that would have an impact on oil. Yeah, and so that impacts the overall economies. Taiwan and China situation, if something happens there, that's an impact on probably something even more important than oil at the moment, which is semiconductor production. And so, those are always out there. They're always, a possibility. And most of the times, it's actually the worst things that can happen in the market are the things that we're not talking about. The market was down 20-some% in 2008 downturn, and then Lehman Brothers failed. And again, that wasn't something we were talking about. We were talking a little bit about credit default swaps at that time, but didn't realize the full impact of it until later.
How many companies had it?
Well, yeah, it got to $7 trillion in like 7 years. Amazing, because a private market, there was no real way to track that. And so anyway, there's always something that can be happening in the background. However, as an investor, you kind of have to be able to see, first of all, you got to see the positive to outweigh that negative. And then you kind of have to understand just, what's the history? How does this thing normally work? Because this stock market is a representation of human emotion.
Yep.
And human emotion doesn't change dramatically year over year. 2025's human emotion equivalent, for this entire world of people that invest in the stock market isn't going to change in 1 year period. Maybe there's some human emotion change over a 100-year period, but that's what makes that look back at some of these trends to be somewhat useful, because it's operating under the same guise of these group of people. And I would say, if anything, it's improved to a certain degree because of number one, there's more households that have exposure to the stock market than before. And number two, there's more money coming into the stock market on a monthly basis, which I think can support the market through these 401k contributions and matches, right, which has become very, very large. And so, anyway, I think some ways that's created some volatility out there also. We've had more of these downturns, since 2000. We've had more 20% downturns, than normal, and that could happen again. But this particular market is not like what we've seen for quite a while. This is a pretty good market. I mean, these are these are pretty solid companies so far that are really gaining. So anyway, look forward to seeing what's going to happen next week. We won't have a show here. This is our last show for the end of the year.
Yeah.
But for the most part, I'll still try to do the summaries on Fridays, so everybody can kind of hear what's happened for that week as far as that goes. But